Today we're going to do a little bit of a breakdown on Avalanche. As the market is melting down, Avalanche is one of those that's getting hurt the most, but there are some things to be looking into it. Let's just get right into it. I want to go over to a couple of things before we bring on our guest today. We'll have Anthony Scaramucci joining us along with Matt Zhang, talking about where Avalanche is going. If you look at the current metrics, especially on Stablecoin market cap, continuing to climb right here on Avalanche. And this is one of the things that I think we'll continue to see a big move forward as Avalanche maybe stabilizes. Number of addresses, you look at the monthly transaction count continuing to climb. This active addresses are stabilizing. So this, again, good news for Avalanche in general. Not only that, you can also take a look at what's going on in the RWA market, and I'll kind of zoom in on that for you guys. Avalanche still maintains the number 3 spot on networks on the league table, which is good because it's still showing good sign of growth. Beyond that, you've also got to look at the volume on the yen, which has started to shift over from Polygon to Avalanche, which is another intriguing component as we start to see things unwinding in Japan that I think will really start to show maybe where the market could be going very soon. Continuing to show very high staking percentages, and of course that being a great performance in general. And I think when you look at that, along with transaction fees, when you get out there on Coinbase, if you're moving stuff around, Avalanche is still leading the pack in terms of fees. So you would wonder why we're continuing to see pressure on the market. Now, just a big recap of the Game Awards, which is one of the key things that Avalanche has continued to showcase in terms of strength, and that is their presence in Web3 gaming. I want to go to a clip real quick, and then we'll bring our guest in and kind of break down where treasuries are going. Take a look.
And the winner is MapleStory Universe.
For best action game, Off the Grid.
And the winner is Off the Grid.
And the winner is Off the Grid.
And the winner is Off the Grid! 4 awards in one day.
And I'm honored to announce the Best Game Award. And the winner is, hang on, Off the Grid.
The people have spoken.
All right, so pretty much a slam dunk, you know, when you look at gaming in general. So you wonder what other things could be very bullish for Avalanche. Well, I wanted to bring on both Anthony and Matt to kind of talk about that. So welcome into the show, guys. How are you?
Hey, good to be on, Paul.
Great to be here.
Excellent. Great to see you guys. And of course, a lot of this, when you look at Avalanche right now, we'll start with you, Anthony. Many people would consider this a very underrated chain right now. Kind of give me your reasoning of why SkyBridge is so bullish on AVAX.
Well, first of all, I enjoyed your preamble and your commentary, but I think the one thing I just want to emphasize with everybody, we've had a tsunami hit the markets from October 10th. And so it's blown everything up. Bitcoin dragged down Solana, Avalanche, you pick the name. And so the real question before you, and I'll turn it over to Matt in a second, is does Avalanche have good fundamentals? You just represented that to everybody. Secondarily, is Avalanche being adopted by institutions? Can I go to the Fortune 50 and when they're thinking about tokenizing things, putting their finances on chain or putting their stock or bond capital structure on chain, are they thinking about using Avalanche? And the answer is yes. And then secondarily, which is something Matt is more of an expert on than me, are these subnets. You know, you're able to customize things on Avalanche that you can't do in other places. So I'm an old fogey in the industry. Okay, so when I look at my peer group that is in their late 50s, mid 60s, what are they going to adopt? They're going to want to adopt things that can customize more than generic things. And this is why Avalanche is going to be a big part of the future story. So I'm wildly bullish on Avalanche. This is a garden variety like correction born from perhaps excess leverage or maybe a market maker getting taken out. And I think the trajectory is still going in our direction. So it's a good opportunity to buy.
Well, I think that's the point is when you see these kind of pullbacks, many people try to either, if you're a very bearish or you're maybe very bullish on a project, these are the times when you're looking into it, especially around the idea around principles and also just the fundamentals of it. Matt, when you look at what you guys are doing from a treasury standpoint, especially on a strategy side of things. Kind of give us a rundown of what you guys are doing differently than others out there right now.
Would love to, Paul. So I agree everything Anthony just mentioned. At Hivemind, we also have decades of TradFi experience. So when we're approaching blockchain and crypto, we're always taking a fundamental type of approach. For example, this year, everybody talking about that. As our team, we look at more than 100 tech companies. We invested more than a dozen, but when actually coming to sponsor leading one, we've been very careful, Paul. We actually had 4 or 5 different foundations approached us early this year, having us to lead structuring of that for them. We actually turned every single of them down. But in the summer, when the Avalanche team sort of reached out to us, we knew we want to do this with them because we know the team for years, just like Anthony. And we think that their chain is really actually doing what blockchain is supposed to do, is adding the real world utilities with the right design, the subnet features to give financial services industries, the gaming industries, actually a way to access Web3 in a scalable and a compliant way. So very quickly, I decided to work with Avalanche Foundation. I called up Anthony. Anthony is very excited about joining the program. That's the born of AVAX One, it's a NASDAQ company, ticker AVX. And the goal is simple. There's 2 layers to it. Like you mentioned, and you know very well, like many other DAT companies there, we want to go and accumulating AVAX tokens and accumulating that for our shareholders on a per share basis. But we're not going to just do that. I think that differentiating us from many other DATs is we need a soul for our DATs. So what actually we want to do? What is the operating business model that differentiating us and making our DAT model future proof? And we believe that actually using the vehicle to actually building an on-chain financial economy is what we actually really excited about. So the goal is on one side, obviously deploying capitals, accumulating AVAX tokens in a smart and scalable way. On the other side is actually with our shareholders' approvals and supports, which we've got, going there and looking for Web2 fintech companies. Let them be remittance companies, payment companies, regional banks, insurance companies that are trading at a very reasonable, undervalued EBITDA multiple basis, selectively invest, roll them up, acquire them. That give us the cash flow, give us the real profit that actually our company will be valued at enterprise value beyond simply book value. Allow us actually to build what blockchain enable us to do, bring them to the Avalanche ecosystem, supporting the tokens, supporting the ecosystems. That's what we're trying to do here.
Well, okay, so a couple of points here. I want to jump back to you, Anthony, and you come from OG Wall Street. You look at what Wall Street is doing right now, which is pretty much all in on tokenized and real world assets. Whether it's Larry, whether you look at what's happening with Tom Lee, you see everyone in the market pretty much pointing in the same direction. Do you feel that the DAT is the digital asset treasuries now are being looked at as a potential unwind?
Well, I think that some of you don't want the baby getting thrown out with the bathwater. So yes, some of these DATs, I think 1 or 2 of them are down 96%.
Exactly.
Some of these DATs were not properly designed in the beginning, Paul, and so now you're as the tide goes out, you're seeing who's swimming half naked. But you're actually talking to 2 TradFi people. Matt was at Citibank, and he ran different businesses for them before he migrated into the crypto portion of their business. And what I would say to you is that you've got people in this business that are looking at a way to tangibly take the operating income that's going to come from the token and deploy it into accretive assets. And those accretive assets will also yield positive and potentially exponential earnings growth. So if you're with us and you take a look at this as an equity, which to me is at least a 2 to 5 year story, you're going to be dramatically benefited from that. And if you buy it now at this level, you'll be dramatically benefited. And it just quickly, Coinbase went public and then, well, look at me, whoosh, went right down. Okay. I think it started out at 400, it went to 80. It's now back to 400. If you were brave enough to be buying it when everybody was naysaying it, look at the fundamentals of that story and look at what's happened there over the last 4 years. So this bear market that we're experiencing, which I love about these bear markets, they're always unexpected. But this unexpected bear market that we're experiencing is a wonderful opportunity if you believe in the long-term fundamentals of something like AVAX One.
Yeah, well, I think that's the thing, and Matt, to your credit, I think what you guys have done, from a strategy standpoint, is really step beyond the idea of just holding the asset, the core asset. This is something that we understand as investors who have been in digital assets, and we understand the technology. Is this a hard sell to an investor who maybe doesn't know this right now? How do you get it out there?
It's a great question. I want to approach this and also answer some of your questions earlier in a different way. I would say all of us three remember .com bubble. Every Google born from that bubble, you had 1,000 companies, internet company didn't make it.
Right.
Now looking back, you're absolutely going to say that's a bubble. But that didn't mean internet has no utility. To the contrary, we went on for a 25-year amazing internet era. I'm going to say the same thing here. I don't think that's going to unwind, but I think that absolutely need to evolve. For every single successful tech companies that are going to evolve from here, you're going to have 100 tech company probably fail because they were never supposed to build a long-lasting, sustainable business.
Right.
By the way, Paul, as you know, it's earnings season. There's a lot of 10Ks, 10Q, 8Ks out there, which means as all of those getting reviewed, you're going to have a lot of shocking details people are going to find in them that are not supposed to be in them because you have people who doesn't have the TradFi experience trying to run a public company, barely understand how to run an earning call. You ask me, I think none of those stats really exist in the first place because they never have the right thoughts to do that. AVAX One, Anthony and I and our leadership team, I don't know whether you know this, Paul, but let me share this with your audience. We're one of the few, if not the only one, actually won for full shareholder vote to do this. Many tech companies out there, they didn't get one. They may or may not need one. But when we're facing questions like this, we said we want to do things in a slower way because we want to do things in the right way. If you think that 1 month delay was so meaningful, or your varying shareholder is not going to prove your debt, you really should think about whether you should do this in the first place.
Right.
So I think that market as today, the way it is not sustainable. People need to evolve. We're very excited about the way we're building it. And here come back to your second question, which is how we're going to tell the story to traditional investor. Would they understand it? Well, the point here is actually not to say we're Avalanche dad. The here point is to say, are you excited investing in a company that's going to build the future of on-chain financial economy? It just happens the underlying technology we're going to utilize building it is the best one in town, which is Avalanche network. So this is the vision we're doing. It's powered by the Avalanche network ecosystem. Not to say we're going to find a chain, just accumulating tokens, and then trying to figure out what to do with it. I think that flip logic is really, really meaningful for us.
Let me get your temperature, Anthony. Wall Street today, where would you put this on a 1 to 10 scale of pro-blockchain, or are they starting to question just because of what we're seeing happen over the last month?
Well, I mean, listen, the last month, if you were a crypto bear or you miss Bitcoin and you hate on Bitcoin, this is fantastic. The haters will creep out of the woodwork and start lambasting people on Twitter. But for me, I think generally Wall Street is moving in the right direction. Just go to Larry Fink and what's going on there at BlackRock, or look at what's going on at Fidelity. Even Van Eck, it looks like now is going to come into the fray for Bitcoin. So, and what we left out, which I think Matt would agree with me, there's OG Bitcoin sellers that have entered the marketplace. Billions of dollars have been flooded into the marketplace by OG sellers. And so I'm going to use a TradeFi analogy here. Those are sort of like venture capitalists that are long-term holders of an IPO, and they've decided now that this is the right time to sell. That typically, if it's a good fundamental story, that recirculation of supply is a great building block to build off of. In fact, having more decentralized supply is a better thing for long-term asset prices. So I think haters are hating, no question, but generally Wall Street is moving in the right direction.
Do you think that we're in a position right now, especially from a regulatory side of things, you think about what Elon was trying to do with his effort around Doge. He was exploring blockchain usage in U.S. government. In general, Avalanche, of course, has been one of the critical chains out there that have been able to do this, actually get it done. Do you think that is maybe a bigger selling point going forward, that the infrastructure play for AVAX is untold right now?
Yes, but remember, I'm a realist. Okay, we have a lot of older people in the government. Okay, and so Donald Trump is closing on 80, Joe Biden before him closing on 82, Nancy Pelosi finally leaving at age 85. I guess Chuck Grassley is going to be in the Senate for another 500 years. I would tell your children to be nice to the world because they're leaving it to Chuck Grassley. And so my point is these older people phase out and a younger group of people enter the government, guess what they're going to do? They're going to do what Elon Musk said to do. They're going to put the stuff on the fully transparent, fully distributed blockchain. And Avalanche is going to be one of those because of the customization capabilities of Avalanche.
No doubt. Well, here was Emin kind of hitting on this, U.S. Commerce Department distributing GDP data on chain. That was back in August, I think, when he put this out. So a pretty big deal going forward. I want to kind of backtrack just a second here around yield-bearing assets, and especially what's been going on with DATs, because now we're seeing some DATs that are starting to activate yield strategies. If you look, of course, I'm just in general looking at what's going on Yield Yak, but there's a lot of opportunities here in terms of pretty significant yields. What are you guys going to use, Matt, for yield generation?
We need to take a balanced approach. On one side, yields are great, especially if you can supporting Avalanche ecosystem companies. And there's many talented teams and people that are building an Avalanche ecosystem. On the other side, typically there's risk associated with a higher yield, right? So we, as one of the, and will be one of the largest holders of Avalanche tokens, our job is stewardship that token treasury. So we will obviously participating in native staking, because native staking means more than just getting yield. It's about participating in community decisions, supporting decentralizations, which beyond economic reasons. So we're going to be very active there. Beyond that, we always want to have part of the treasuries that seeking yields that away from native staking and getting higher yields. But I want to double down here is like whatever we do that needs to be on a risk-adjusted basis. But I think it's great to see the ecosystem, the DeFi communities so prosperous, and there's a lot of activities going on there. And our team has been engaging with many founders, and we're looking for different ways to sort of maximizing the MNAV and the yields for our treasury.
Yeah, Anthony, I'm sure you saw Tom Lee's interview with, I think it was CNBC. Where
Brian Sullivan.
He kind of got cornered into a position of trying to explain what was happening with these market makers. He kind of regaled around the idea of a glitch. And do you think he handled that right? I mean, we are arguing that internally here as to whether or not that was the right way to approach it, especially with BM&R as one of the biggest DATs out there.
Did he handle it right? I think he's pretty honest. I mean, I watched the interview twice now. I think he's trying to tell you that Matt said it before we went live here. We were in the green room, Matt and I, and Matt said somebody got burned very badly October 10th and 11th. They're probably tied to TradeFi, so they haven't fully exploded, but they're in the process of dumping and liquidating inventory and trying to deleverage themselves. And this happened during the FTX debacle. It happened late in 2021 when it looked like we weren't going to get the crypto cash ETF after the futures ETF. And so I think he got a little tongue-tied, but he was trying to explain to people that there's an operational thing that's going on right now that's going to take a few weeks to get itself out of the marketplace. Now, he said 8 weeks. We're into week 6. I would be interested to see what Matt says. I think we're getting to the end. I think the bottom off that 81 number, if this holds for the next week, I think 81 could be the interim bear market low, possibly. Maybe that'll be the low. But I'll just leave you with this thought, Paul. The buying is there. You talk to Robbie Mitchnick at BlackRock. You talk to other guys that are selling ETFs, 11 or 12 ETFs that are out there. The volume is there. And so, ETFs liquidate. Sure, they go through spasms of liquidation, but on a net basis, the ETFs are buying, and that will push the price of Bitcoin up over the next 3 to 6 months. We like calendar year endings to be great. This calendar year ending probably won't be great, but I like the next 24 months.
Listen, we're definitely going to get both of you back on the show because there's so much more I think we need to unwrap here. Maybe after this market stabilizes a little bit, we'd love to have you back because there's, I think, what you're doing from a strategy standpoint, one, super interesting and also very important, I think, for at least the Avalanche ecosystem. So, Anthony, Matt, thanks for coming in today. We appreciate it.
Hey, great to be on. Good to see you,
bet.
Matt. Good to see you, Paul.
All right.
See you guys. Bye-bye.
You guys know what to do. If you're not already doing it, make sure and jump in on our private group. We always leave a link down below. You can join down there for free. And of course, follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.